Hi, Christopher. Okay, so my name is Catherine McBride. I apologize for the rough start with the course. I wasn't originally teaching it. Now, obviously, I am. Although I had everything set up upstairs. The lighting wasn't good because when I stopped using my computer for talking online over the last couple of days, it seems that my family has raided my supplies, but that's okay because I always have backup. So my name's Catherine McBride. I'm your instructor for the class. A little bit about me. I've been teaching for nationals for about 10 years. I've been working in higher ed for unbelievably 25 years. Prior to that, I have an accounting degree. I have an MBA. I have a doctorate in advanced accounting. I promise you it is worse than it sounds. Seriously, I mean, once you've done all the accounting, you've done all the accounting. So it's not like you're really doing a lot of accounting with your doctorate. You're doing a lot of writing. I worked in manufacturing. We had our own outdoor cushion manufacturing company, which will end up in my managerial accounting class, which is after. So the first thing I'm going to do is I'm going to kind of share the course outline with you, and we'll talk about what goes into the course, and then how some of the resources that I've already loaded into the announcements and kind of the flow. And then we're going to dive into the practice problems and start looking at some of the things that you're actually working with. I do realize that this is a holiday weekend, so I'm going to jump right out there and I'm going to do something a little bit unusual, which is that I'm going to say you can, and now it's, okay, so here's two things, right? It's a fast-paced class. Obviously, you're doing it in 4 weeks. You obviously know it's a fast-paced class. So there isn't time to get behind, which means you can't put off really doing week one. However, I will give you the option of taking the week one quiz anytime in the first 2 weeks. And there's a couple of advantages to that. And one is that in week two, we really slow down. So you're going to want to pay attention to the course outline because the chapters aren't all sequential. In week two, it looks like we jumped to chapter 12, which would seem just crazy. But the reason it's not is because that's cash flow statements. We do very little with it. So we can kind of slow down and keep working on journal entries because by the end of the 2 weeks, you've gone all the way through the accounting cycle, which takes a lot. And the reason it takes a lot is because every single thing you do, you will have to use everything that you've learned. And so it's really hard to learn a bunch of new stuff and use it all at the same time. So the first week is really challenging. The second week, things start to get a little bit easier because you have some experience. So there's not a lot I can do because it's a 4-week class, but I'm going to be as sensitive as possible to Thanksgiving being in the middle of the start because I want you to be successful. So I'm going to go ahead and share. I'm going to pull up our course out. I'll pull up our course and I'll share it so that I can show you where everything is. Not really sure. Oh, I got kicked out. Okay. Not a problem. There we go. Okay, so this is my homepage. May look a little bit different than yours. I'm going to go ahead and go into the course. So the announcements are really important in our course. And the reason the announcements are really important in our course is because I put a lot of information in the announcements that are going to be helpful for you. And you're not going to see all of these because they're date sensitive, but like here's the very beginning. So I've given you here a summary of a lot of the common account names and the accounting equation. Honestly, by the end of tonight, this will be very useful to you and it won't look like Greek anymore. But even more importantly, I have posted short videos. They'll come up in a minute. There we go. I've posted short videos. So embedded in each week of our course are videos. I recommend you watch these instead. The videos that are embedded in the course, I actually embedded in the course myself when we did the course, but I didn't have my own short videos. About a year and a half ago, even before COVID, and I was really glad I did it with COVID, I made a lot of just short videos that kind of go over what I would have said to you if I was doing a 2-hour-long lecture, because hunting for something over a 2-hour period when you're trying to figure it out isn't really an optimal student experience. So before you come to class, if you did the very minimum, which is watch these videos, and they're very short, I mean, 6 minutes, 6 minutes, 6 minutes. Apparently, I'm not capable of doing a 5-minute video, since that's 6:04, 6:03, and 6:01, and I was shooting for 5 minutes. But that's pretty close. Here's 6:04. So these videos will be really helpful for you, and I would watch them before I watch the ones that are embedded in the course. Okay, so I'm going to go up here. Sorry if I'm making you Google-eyed from scrolling. The next thing you need to know is if you go to course resources on the left-hand side, our course outline is right up at top. I moved it there so it was easy. There's also PowerPoint slides embedded in each week, but they're also all here together. These templates are here. Most of it doesn't apply to you, but I put a couple of really good things here. So like one is the APA Word template. I guess they all do apply to you. One is the APA Word template. And that's there, not just for this class, but for any class, because setting up the headings in APA format is a nightmare. So I just gave you a template that you can use. The accounting equation with examples is on the bottom, and on the top is a phenomenal resource for financial ratios. I love the resource because it not only tells you what the ratio is, but it talks about do you want it to increase or decrease? What does the ratio tell you about the company? And so this is the kind of resource that will be useful in numerous courses. Then there are some good websites. At the end of our course, there's a paper to write. Some of these websites might be helpful for that. If you go to the McGraw-Hill Connect library, you'll find some additional resources, but you can access them through the homework too. So I'm going to go up here, and is there anybody this is the first class you're taking at National? And by the way, you can unmute really quickly just with the space bar. Don't be afraid to talk because you're going to. Okay, so I'm going to pull up the chat. Oh, you are new. Okay. So on the left-hand side, under there's some good resources. So under the home page is just general information about the course. You can access the announcements here. Like if you wanted to see just quickly like the names of them, I typically open them so I can see, like the videos that are there. The syllabus is just general. The course outline is under course resources, and that's what really tells you what the course is about. In other classes, it may be way down on the bottom because that's where it was when I got the course. I just moved it up to the top. But it's supposed to be there under course resources in all of your courses. I think I have to stop sharing and reshare with Word open now that it's done these upgrades, which are surprisingly less convenient. Okay, am I sharing the course outline? Okay, perfect. So the course has an ebook. If you want a hard copy book, my recommendation is to order an older edition because all of the homework is in the lab. So it doesn't matter about having the correct problems in the book, and the basics in financial accounting, they haven't changed. So if you want a hard copy book, you can very inexpensively buy an older edition. I love the learning outcomes because these learning outcomes are like all the things that you don't know now. And at the end of the course, when you read them, you'll go, oh my gosh, I could do that. So what we're going to do in this course is we're going to go all the way through the accounting cycle. So you'll be able to do journal entries, adjusting entries, the financial statements, including the balance sheet, the income statement, the statement of retained earnings. You'll be able to read a cash flow statement. We're going to learn how to handle uncollectible accounts receivable, long-term debt, short-term debt, inventory, and stock. So there's a lot in 4 weeks. So let's see how we're going to manage that. Okay. Every chapter has a Learn Smart module. The Learn Smart module is where you should start. And what the Learn Smart module does is it walks you through the material, and it takes you to the places that you need more help understanding. So what my experience has been is that students that use Learn Smart do better than the students who don't use Learn Smart. Now, if there's a compelling reason once you've tried it, if there's a compelling reason why it may not work for you, I welcome the conversation about that. So my phone number is on the very top. You're welcome to use it to call me and talk. Because every resource isn't good for every single person. The next thing that you should do are the practice exercises. The practice exercises are in the lab, and they're practice. So they're shorter problems. You have unlimited attempts to get them right. But the purpose of them is for you to learn the material and struggle with it and do it in bite-sized pieces. That's the purpose of the practice problems. After the practice problems, you have the homework problems. The homework problems are a little bit longer, more involved. They combine concepts. The homework problems are worth more points. You don't have unlimited attempts. You have 3 attempts with each one to check your work. So you'll find that if you're really putting the effort in, if you're not getting there, then if you call me, we can look at it together one-on-one, because I can get into the lab and see what you're doing and where you're making the mistake. So there's really no reason to not learn the material. You have the tools to learn the material. You have me to help you learn the material. It's just a matter of putting in the time, which, again, I understand this time. There's a quiz each week and a final exam at the end. So the quiz each week is only over the material that we learned that week, technically, but it really doesn't work that way in accounting. The first 2 weeks, you'll see a lot of the same material on the quizzes. After that, you'll see it more separate because we're learning distinct and separate concepts. And then the final exam is cumulative. I do a 100% complete review for the test every single week. So there shouldn't be a single thing that we haven't talked about, worked through, or that you see on the quiz that is completely new for you. Nothing should surprise you. You have a course project, which, okay, believe me, I'm the kind of person that would write my paper before the course started to get it out of the way. I actually don't recommend that, although there were some real advantages. It saved a lot of stress. So believe me when I say this, I would like you to take the course project and don't even think about it for the next 2 weeks. First of all, you'll have more time than you think in the last week because we don't cover the concepts as deeply. But also, you don't know enough about anything right now to pick a good topic or one that you're interested in. And more importantly, learning the accounting cycle over this short period of time, you really have your hands full with that. So I'm going to ask that you don't think about the course project for 2 weeks. If for some reason you feel that you're unable to do that, you're welcome to call me. We can talk about it. Maybe for you, everybody's out of town and it's a great time to write a paper, but just if you do want to talk about it before that, call me, but I really recommend you spend your time on the work for the first 2 weeks. So you can kind of see by the breakdown in the grades that that the practice, you know, if you don't do the practice, you're losing 80 points, which brings you down almost a full letter grade. But the biggest problem with not doing the practice is you'll struggle with the homework. Okay, now let's talk about crazy family time, right? Or COVID going on, or anything. I mean, I've been doing this a long time and I was a student for a long time. Let's say you get to the weekend and you realize, oh gosh, I haven't done the practice, I haven't done the homework, but I better take the quiz because it's due. I can always go back and do the lab assignments, okay? If you find yourself thinking that, which I've had students think that, if you find yourself thinking that, that should be an indication that you want to pick up the phone and call me, because I will work with you to do something differently. What you don't want to do is take the quiz without having done the work. All right, so there's more information here about the different things that we're doing. If you look at the live practice, you'll see that typically we meet Tuesday and Thursday. The reason I don't meet on Mondays is because I want to give you time to look at the material before we meet, but I don't want to give you so much time that it's all crammed at the end and you're worried. This is a good place to look to kind of see what you're learning and what the pace is. And then the other place to see that is down here by week. So here you can see in week 1.
Sorry to interrupt.
Yep.
I just had a question about those time frames. Are
Yep.
those like California time or where you're at?
Yeah, everything
Michigan?
specific time. Yep, everything specific time.
Okay.
I'm actually not,
because on the 25th
yep.
it was it said 7 to 8. That's today, but we started at 6. I'm just making sure that those are all lined up.
Yep.
Okay.
Yeah, I'm actually on the East Coast. My phone number is Denver, but I actually live in Detroit.
Got it. Okay.
So for those of you on the East Coast, I can't go any later. For those of you in California, I realize it's challenging. But hey, the good news is you'll have off work a lot. Mm-hmm. Or you're working from home and it doesn't make any difference. There's a discussion board each week. You are required to post an original response to the question and then respond to at least one other post. The more thought, and I understand it moves fast, the more thought you put into the discussion, the more easily you'll understand the work, because in the discussions, we can talk about the theory behind what we're doing. Okay, so then you have homework. These are the dates for the quiz, but it's basically every Sunday. Oh, by the way, all of the due dates on here, it is totally okay with me if you turn in everything by the last day of each week. And by that, I mean Sunday. And I realize that our last week technically ends on a Saturday, but because it's so difficult to carve out time at home and everybody has, their own schedule, and it's really hard now because, you can't just send people to the neighbor's house to play or, take them to the movies or, well, anything really. So that way you can take the final exam on Saturday or Sunday. You can turn the paper in on Saturday or Sunday. If you wait that long, it's totally fine. I know that once you have the time etched out, that's when you want to do it. Okay, so the next thing I'm going to do is I'm going to go back to our course. And I'm going to go to week 1 to show you how to get to the lab. And I'm going to scroll down here. You'll see that there's the PowerPoints right there and some discussion just about basic accounting principles. These are the videos I was talking about that are embedded. There's nothing wrong with them. They're just longer. And mine look specifically at our work. So I'm going down here to where you're going to start here, register for Connect. Is there anybody here that is not in the lab yet? Okay, good.
And
So,
then
yep. Okay, so you're going to start here with Register for Connect. There's an ebook, so you don't have to buy a book. You do have to have the code for this. I'm not sure how that works. These are the 2 Learn Smarts. There's going to be 1 for each chapter. So I'm going to go into the week 1 practice. And then it'll just pull up for you where it looks like the homework. Where's my student view? My faculty, there we go, student assignment view. So we're going to talk about the information as we work through it. And hopefully, since I don't have my tablet, I can use my daughter's and it'll work. All right, so you're just going to hit continue. Notice you have unlimited attempts. Okay, so this is the first concept that we learn. And whiteboard, full screen snip. Okay, I can do that. This is different. Okay. Well, I want out now. Oh. All right, I'm gonna have to go yell at my daughter, who so nicely let me use her very expensive graphics tablet. Maybe I can do it here. Try that. McKenna, honey, how do I make it work? The tablet. I can turn it off, but how do I make it work? Yes, how do I make it work? Okay. Fine, I'm turning my camera off. Just come show me how to make it work.
What did you do?
How do I make it work? What? Why are you behaving this way?
Does this beepboard not work?
It does.
Try again. Is the mouse working?
Yeah. Here, you want to just plug it in here? Oh, come around here. I just put my camera back on. I do. Why isn't it working?
Are you on something you can draw on? You can't just draw on everything. Your camera.
Okay, McKenna.
Let me see it.
No, it's, I don't know what to do.
Turn your camera off so I can look at it.
All right. One moment, please.
Mom, what do you have open? Are you trying
The
to go
lab.
on the website?
Well, the lab, but I always draw in the lab with mine.
Do you usually draw on Zoom?
Yeah, I always draw on Zoom.
Stop video.
Okay, come show me.
Don't know how to work. You always draw in the lab?
Yes. Maybe Dad could find a
What I am.
cord for this. Doug!
You're not muted.
Right.
I don't know.
Okay.
I would say screenshot it and put it in MS Paint or Word or some shit.
Okay. I can manage. Okay, I seem to be struggling today. All right, so can you hear me? Yes, okay. So this is the accounting equation. Assets equal liabilities plus equity. This is, I'll make it bigger. This is one of the rules in accounting that this always balances. No exceptions, always balances. So we're going to start looking at it by saying, all right, so we have assets equal liabilities plus equity. So I normally try to avoid saying that, that accounting is math because it's truly not math, but I'm going to say that horrible word math anyway, because we can rearrange this formula. We could have assets equal liabilities plus equity, or you can take assets minus liabilities equal equity, or you can take assets minus equity equals liabilities. So if we have 800,000 in assets and 470,000 in equity, how much are our liabilities? Come on, don't make me get my calculator out.
330,000.
How much?
330,000 for liabilities.
Okay. Now, here's how check your work works. Up here in the right-hand corner, it says check my work. I'm going to click on that. And you don't have to do it every time you put a number in. I'm just showing you. Green check, and then this says answer is not complete. I will tell you there's one question in the class that it says answer is not complete. You have to make sure you're scrolling all the way down. You don't see the total line. Now to keep going, I have to go back up here on the right-hand side and I have to say return to question. All right, so now for B, we know that the assets are 600,000. We know that liabilities and equity are equal. So that tells us that they must each be 300,000, not 3 million. $300,000. Okay, does this piece make sense? Now you might wonder, how will this take into account every type of transaction? It takes into account every type of transaction because of what we're going to see as part of equity. Okay, I know that everything is new to you. So let's talk about the statements in order here, which I normally write down. Okay, so we have the income statement. The purpose of the income statement is just what it sounds like. It wants to tell you how much net income or loss you have. So the income statement, if you had a business, your income is made up of your revenue minus your expenses. So that's the income statement. That's everything there is to the income statement. The balance sheet is our accounting equation. The balance sheet is literally assets, liabilities, and equity. And the neat thing about the balance sheet is it balances because the accounting equation balances. So for the balance sheet, you're just going to take your assets, add them all up. You're going to take your liabilities, add them up, your equity, and the two will equal, always. So on your balance sheet are assets, liabilities, and equity. So in order to understand the balance sheet, we need to know what assets are, what liabilities are, and what goes into equity. So assets are things that you can use for future benefit. And I'm going to pull this up now to show you and talk about them. go back to the resource that's in here. I know I just paused sharing. Give me 1 second. I'm going to pull this up so we can talk about it since I can't make my tablet work at the very moment. Okay, so I'm going to go to our course resources, and I'm going to go pull up that file I said was going to be so useful, this accounting equation with examples, which is also in the announcement. All right, so this is the accounting equation. So here's what happens with the accounting equation. The reason the accounting equation encompasses absolutely everything that you're going to learn or any transaction that's going to happen is because under equity, there's 4 pieces. There's revenue and expenses. So like if you have a business and you're bringing in more revenue, that means you have more equity in the business. As an owner, when you bring in revenue, you have more, right? As you spend, as you incur expenses, you have less for yourself. That's the first half of equity. The first half of equity is what's called retained earnings. And in order for it to be retained earnings, you have to have earnings that have been generated by operating the business. So that's your revenue and expenses. The other side of equity is contributed capital. So if you have stock, that would be common stock and dividends. If it was not a corporation and you didn't have stock, then you have the capital that owners have contributed in or the withdrawals that they've taken out. But that part of equity doesn't have anything to do with operating the business. Okay, so now we have assets and liabilities. So assets are something that is going to produce a future benefit for the company. So we have cash, accounts receivable. Accounts receivable is money that you get like a revolving account with customers. It only applies to like sales that you're doing on a regular basis at your company. Short-term assets, investments, current investments or long-term investments. Supplies is an interesting one. So in our little accounting bubble, we are going to record supplies as an asset. The reason I say that's interesting is because in the real world, most of the time, supplies is just an expense. And the reason it's just an expense is because we spend about the same amount of money every single month, right? So that's why it ends up being an expense. If you had a company and you brought all of the supplies into one central location and then you dispersed them as different locations needed it, then it would work this way as an asset and you'd expense it as you use it. But in our accounting bubble, supplies is going to be an asset. Just don't go to work and tell your controller that they're handling office supplies incorrectly. Furniture, fixtures, building, equipment, land, intangible assets are things like trademarks and patents, notes receivable. Okay, we have one very unusual item, and it's called a prepaid expense. It is the only account that has the word expense in it that is not an expense. A prepaid expense is an asset. An example of a prepaid expense would be like, let's say that I paid 3 months rent in advance. I have a future benefit. I either get to use that office space or I'm going to want my money back. So I have a future benefit. Another example of a prepaid expense would be like, let's say I paid my 6-month insurance premium for the vehicles upfront in advance. I don't have an expense when I pay it. I have an expense as I use it. So in the very beginning, when I pay them the money in advance, that's an asset because I have a future benefit. Okay, do assets make sense? Are we good with assets? And I'm moving my chat where I can see it. Okay, good. All right, now liabilities. Liabilities are things that we owe. They are things that are going to use assets up to satisfy them, quite often cash. Accounts payable. So accounts payable is like the flip side of accounts receivable. Accounts payable are things that we owe vendors. Like when I had the cushion manufacturing company, I had a revolving account with the foam manufacturer, and we would just pick up foam and they'd invoice us and I'd pay them every month. That was an account payable. There's salaries payable, interest payable, notes payable, mortgage payable, bonds payable. So there's two things that I want to tell you about liabilities. Three things. One is notice that most of them have the word payable in them. So that's kind of a good hint that it's a liability. The other thing about liabilities is a lot of students get them confused with expenses. And the reason is because they're closely related. So the way financial accounting works is that we record revenue when we earn it. And we record expenses when they're incurred. So let's say that I owe interest. I have an interest expense, but I'm not going to pay it until I pay off the whole loan. I still incur that expense every month, even if I'm not paying it right now, because I borrowed the money. The time went by. I have an expense. So when I have an expense, one of two things is going to happen. Either I'm going to pay it with cash, so that'll go down, or I'm going to record a liability because I'm going to pay it later. So that's why liabilities and expenses are related, and they can be confusing because, like, I'll have an interest expense and I'll have an interest payable account. I might have a rent expense and a rent payable, taxes expense and taxes payable. So when I have an expense, I either pay it now or I have a liability to pay it later. Does that part make sense? Are we good so far? It's actually something that we'll talk about. Yeah, then that's okay. That's actually something we're going to keep talking about for like the whole 4 weeks. There will still be times when it's like, oh, no, remember, we didn't earn the revenue yet, or, oh, no, remember, we earned the revenue. So it will become more clear as we talk about it, but I wanted to give you the background so that if you feel like you're getting confused when you're going through the material, I will have already cleared it up for you. Okay, there's one really weird account under liabilities, and that's unearned revenue. And it's the only account that says revenue that is not revenue. Unearned revenue is a liability. An example of unearned revenue is like when I manufactured cushions and Hilton would write us a $40,000 check before we started their job. Have I earned any revenue when they wrote me that check? No. How do I earn revenue? Cushion manufacturing company.
By either making them or by returning the money.
Right. So I'm either going to make them or they're going to want their money back. That's why it's a liability, because I have an obligation to do something, preferably make the cushions. But that's an example of unearned revenue, when somebody pays you in advance and you haven't done the work, because cash isn't revenue. Cash is cash. It's an asset. That's great. I'm going to put it in the bank, but it's not revenue. Revenue requires some performance on my part. Okay, so then we have our revenue, which that's pretty simple, and our expenses, which we deal with those every day, so you probably recognize them. There is one that you may not be familiar with, which we'll really talk about when we do inventory, which is cost of goods sold. And we'll get there, but we don't have to be there this week. Okay, on this, if you forget them, I've typed out explanations of each one of the strange accounts. You're going to find that this week feels like you're taking a foreign language and I'm asking you to write a paragraph in it, where you're like, I can't do that. This is your resource sheet for the foreign language. So this will help you with some of the terminology in the course. The other thing that will help you is if you flag a balance sheet with a lot of items on it, an income statement with a lot of items on it, a statement of owner's equity with a lot of items on it, because that will help you remember also like what accounts go on what statement. All right, now we're going to go back to the problem. Okay, so each one of these belongs on one of the statements. The statement we haven't talked about yet is the cash flow statement. That's in Chapter 12. The cash flow statement is interesting. The cash flow statement has three categories. We're going to look at cash that comes in or goes out from operating the business, cash that comes in or goes out from investing activities, cash that comes in or goes out for financing activities. So if you see cash on here, it's an asset. But if you see like cash from operating activities on here, that goes on the cash flow statement. What was that thing? I don't like the Zoom change where I have to let people in. Wait, what
I
happened?
think you can set it up in your settings for them to automatically join.
You can't anymore. They changed it as of the end of October. It's just incredibly, I mean, I don't understand why the security measure was so important, because if you wanted to set it up that way, you could do it. So they've taken, yep, they've taken away that option now. It's really annoying. Hello. Okay, so now dividends. We're going to say, are dividends part of the, so the way to do this is to figure out what type of account each is, and then figure out what statement it goes on. So dividends are part of equity. But the odd thing about dividends, when you start looking at them, is that they don't go on the balance sheet. They go on the statement of retained earnings. So the statement of retained earnings is simple. It starts with beginning retained earnings, and it's the only statement where when there's an account that has a zero balance, like if it's the first year of operations, you still put beginning retained earnings with a zero there, because it tells the user it's our first year. It's informative that there's a zero. So you have your beginning retained earnings plus your net income minus your dividends gives you ending retained earnings. Dividends are a reduction in equity. They're not an expense. Yes, we write a check for them, but they're not an expense. What they are is they're taking part of the earnings that have been retained in the business and we're giving them back to the shareholders. Not an expense. So this actually goes on the equity. It goes on equity and cash flow. Postage expense. What type of account is postage expense? Asset, liability, revenue, expense?
Expense.
It's an expense, right. So now, and janitorial expense, we can see that's an expense too. So what statement do expenses go on? The income statement, the balance sheet, or the statement of retained earnings?
It should be the balance sheet, I believe, right?
The balance, okay, and
Or-
now this is a good opportunity to say. Okay, I know where you got that. Yes, it goes into equity, but the statement that it's on is the income statement, because the income statement is revenue minus expenses gives me net income. The net income number then becomes part of retained earnings. So like when you're doing the financial statements, you have to do the income statement first, because net income is going to flow to the statement of retained earnings, which you have to do second, because retained earnings is going to go on the balance sheet. Now, if you do them in the wrong order, it's okay. You'll be missing a number and you'll go, oops, I've got to go do that other statement. So both of these go on the income statement. And I'm glad you're speaking up, because it's totally okay to be wrong, because we've only been doing this for 40 minutes. Have you ever been good at anything after 40 minutes?
No.
No, I haven't either. I haven't. As I said that, I'm like, God, maybe he has. I haven't. Rent payable. What type of account is it when it says payable? Asset, liability. Right? Yes, it's a liability. Rent payable is a liability because we're going to pay it later. What statement do liabilities go on? The income statement, the balance sheet, or the statement of retained earnings? I know, it's all brand new. Balance sheet has assets, liabilities, and equity. Yep. Mm-hmm. It's all brand new. It's like a foreign language right now. Factory, the factory building. What type of account is the factory?
It's an asset, isn't it? Because it's
it is
if you in the factory, like that's your factory.
It's an asset. Yeah, it's your factory, and it's going to provide a future benefit. You're going to manufacture your products out of the factory. So what type? So it's an asset. What financial statement do assets go on? The income statement, the balance sheet, or the statement of retained earnings?
So that's the balance sheet, right?
That's the balance sheet. Yep. Assets, liability, and then total equity goes on the balance sheet. Haircutting revenue. What type of account is haircutting revenue?
So that's a service revenue. So it's
yep. So we've earned revenue. Yep.
Yeah.
What financial statement?
Balance sheet or or is it income statement?
It's income statement, because on the income statement we take revenue minus expenses gives us net income. The retained earnings goes on the balance sheet, which this is part of. Legal expense and advertising expense. What type of accounts are those?
Well, they're obviously expenses. Advertising, just another way of saying marketing. Legal expenses, like, whatever, your legal or
they're both expenses. Yep. What type of, which financial statement do they go on? The income statement, the balance sheet, or the statement of retained earnings?
Income statement.
Yep. See, it gets easier, right? So I'm going to challenge everybody else to turn their cameras on. Here, I'm going to do check. This is really great because it catches any like silly mistakes that you've made. Plus, I love green checks. It's like buying school supplies. It never gets old. So if you have stuff going on in the background, that's okay. I actually came out of the office because the lighting was better. I sat downstairs. I know that everybody has families going on right now, and I know that some of them are eating or wishing they were eating right now. So that's okay. But the more you participate, the easier it is to learn the material. Okay, so for this one, thank you, Ryan. I appreciate that. So for this one, we're gonna figure out if each account is revenue, expense, or dividends. Revenue, expense, or dividends, which is a problem because they don't all say expense, which I hate because they should. Salaries, expense, revenue, expense, or dividends?
Yeah, salaries and expense.
Yeah, it has to be an expense. What about insurance expense?
Yeah, it's expense.
Yeah, unless we sell insurance, which we don't. Wages
course.
expense.
Yeah, wages, yeah, that's expense.
What about consulting revenue?
That's a revenue.
Postage. If we buy postage.
That's a shipping expense.
Yep. And freight.
So freight. Same.
Same thing. Owner withdrawal.
Dividend.
Revenue. Dividends. Yes. If we pay rent. Wait,
Well,
that's confusing. It should be an expense.
Yeah.
Well, it can't be revenue, and it can't be a dividend. There we go. How does that feel? That feels good, right?
Yeah, and that would be like, that'd be kind of different than like mortgage, right? Because that'd be an asset because you own the building, right? So wouldn't it be expense?
Okay, so you have two pieces, right? Just like think of your house, right? Yes, I own the house, but what do you also have? You have a mortgage, right? So there's two pieces. Every transaction has to balance. So every transaction has at least two pieces. So you have the house and you have the mortgage payable. You buy your car, you know, it's like, yeah, hey, look at my new car. I have a new car. Yeah, you have a new car. You owe the bank $40,000, but you have a new car, right? Two pieces still. All right, assets, liability, or equity. Is furniture assets, liability, or equity?
Asset.
Asset, yep. What about dividend? Asset, liability, or equity?
Equity.
Yes, it is. Salaries payable. Asset, liability, or equity?
Liability.
Yep, it's a payable. That's a liability. Equipment. Asset, liability, or equity?
Asset.
Yes. Taxes payable. Asset, liability, or equity?
Liability.
Look at this. Buildings. Asset, liability, or equity?
Assets. Well, it's buildings you own,
no, you're
right?
right.
They're not talking about.
Yep, you own it.
Right?
Okay. Right. If you rent something, that's an expense. But if you own the building, that's an asset. Yep. Right. Yep. All right. This is just definitional. I'll have you do that. I want to look at journal entries and T accounts before we go. I also have a video with them there. And I have a video with practice also.
While you're doing this, I was going to ask you two things that you brought up. The Learn Smart, is that like a test, like, or is that like, do they actually?
No, I'll show you. I'll show you. So I'm going to click on.
Because I've been going through and actually reading the chapters because I didn't want to start that because I thought it was like a knowledge check kind of thing.
Oh no. Okay, no. Okay, there's, except for entering the quiz, everything that you do here, you can go in and out of, and you can't break anything or hurt anything. What you will notice is when you enter, there's points for everything, right? So when you like enter the practice problems, let's say you finish one, and so you have, 1 point. All of a sudden, the grade book's going to show 1 point. So like, let's say on Sunday night, you look at the grades, or Monday, you look at the grades and you're like, phew, I got an A. And then you start the lab and there aren't a lot of grades there. And all of a sudden it adds a 0. And so you pull it up coming to class Tuesday and you're like, what, I'm failing? How is that even possible? It's because of the lab. So just be prepared for that. But everything here is to support your learning. So it should be Learn Smart, practice, homework. So when I go into Learn Smart, am I sharing?
Yes.
Does it say Smart Book on the screen? Okay. I'm going to show you some other stuff in the lab too, so you know where all the resources are. So it gives you a little knowledge check first. And the nice thing about that is it will take you through things that you don't know and not take you through the things that you do know. So this isn't a quiz. This is to help you work on the parts that you don't know instead of the parts that you do know. Now, if you haven't taken accounting before, you're probably going to not know a lot of this, but you shouldn't expect to know a lot of this. And I know how bothersome that is when you think of it as a pre-test, but it really isn't a pre-test here. Here, this is a tool for you. So, you know, you can be perfectly honest. Like, I'm like, okay, expenses. Oh, yeah, I think I know what that is. Cash. Let's see. Oh, I guess I left all rest blank. Okay, that's fine. So now I'm here and it's giving me practice. Like, this is like what we started with, and I can look at this and go, oh yeah, I know that. Oh, it asks me to do it. Oh, I give up. So
Sorry,
once you go
should we-
through.
Sorry.
No, it's okay.
You need to read a little bit
I was gonna
more
say-
at this point.
So should we be reading the chapters
Please click read and return
and
to the
then
book.
doing the Learn
Yes.
Smart, or? Okay.
Well, this goes with, you can do this instead of reading the book, or read the book while you're doing this. Like here,
Okay.
down here on the bottom right, it says read about this. So if you click, so if you're looking at this and you're like, I don't know, it's going to take you in the book, and it also has some videos that are really good. So like this will take you right to where they're talking about it in the book. Like here's our example, and here's a need to know video. So
Use the accounting equation to compute the missing financial statement amount.
I don't know if you can hear it, but it kind of walks you through the questions that are like what we're learning.
Must equal the
Yeah, I
sum
saw
of
that.
total liabilities plus equity.
It's a little boring.
For Bose Corporation, $150 of assets equals liability.
Make it stop, make it stop, make it stop. Okay. Yeah, you can't hurt anything. All right, the next thing I'm going to look at is I'm going to go to the second practice. Yeah, I've really been impressed with the learning that I've seen happen through Learn Smart, which still doesn't mean it's right for everybody. This is what we already did: assets, liabilities, or equity. Asset, liability, revenue, or expense. So this should look familiar. Okay, so normal balance is not what you would expect. Normal balance means whatever the account increases with, either debit or credit. So let's talk about debits and credits. The first thing I want you to do is I want you to forget anything that you think you know about debits and credits unless you know accounting, because I'm going to make it much simpler for you. So I'm going to show you two things here. So with accounting, debit and credit do not mean increase or decrease. Debits increase some accounts and decrease other accounts. Credits increase some accounts and decrease other accounts. So they absolutely don't mean increase or decrease. It depends on the account that you're dealing with. Normally I would just write this out, so I'm looking for it to show you a good example. So this has to be memorized. And this is in our course. But you're simply going to have to memorize debits and credits, because debits and credits are a man-made transaction. It's not something that you'll just automatically get if you just look at it long enough or the right way. Here, we'll use this one. That's expensive. I'll use this one. I'll get my tablet working. What the heck? Oops, I went too big. We use what's called a T account. A T account is actually, I should pull up the PowerPoint. A T account is actually used to keep track of balances. I'll show you this here, that'll work. Do you see T account? I need to share this. I hate what they did to sharing also. There we go. Okay, so we use what's called a T account. T accounts are actually tools that are used to see the flow of dollars and cents. You're going to use T accounts the way they're designed to be used next week when we do adjusting entries. But all the way through the course, we're going to use T accounts to accumulate balances. So in the T account, the title of the account goes on the top, like cash is on the top, right? And then you have debits and credits. Debit means left. Credit means right. You've probably figured out already that we make complicated words for simple concepts, right? So here, we're going to call debit left and credit right. And here's the other strange thing. The abbreviation for is DR and CR. And it's funny because I taught for years without noticing that debit didn't have an R in it. I just, back as an accountant, I mean, they said, this is what it is. And I'm like, okay, that's what it is. And didn't think about it until I was walking out of the room and a student's like, wait, why is that DR? And I turned around to say, it's like, well, obviously, I looked at the word and it's like, I don't know. So it turns, the R is from, it actually comes from the Latin words debere and credere. So that's why it's DR. But debit means left and credit means right. Debit will always be the left-hand side. Credit will always be the right-hand side, but it won't always increase. So there's a couple of ways of remembering what increases. We can look at the big picture, which is always good to do. So the big picture here on the left-hand side, we see we have assets equal liabilities plus owner's equity. Okay. Assets increase with debits and decrease with a credit. So if I want to increase cash, I debit it. If I want to decrease cash, I credit it. On the other side of the equation, it's the opposite. So liabilities and equity both decrease with a debit and increase with a credit. Now, there's something interesting about equity though, because remember, equity is comprised of revenue and expense, capital contributions, and dividends. So when you're looking at debits and credits, what you're going to see, and this is the same when you're looking at the accounting equation balancing, we're looking at equity when we look at the accounting equation. But if I have an expense decreases equity. So it's going to behave in the opposite way. an expense is going to be increased with a debit and decreased with a credit. I think it's on page 69 in your textbook or thereabouts is a really good resource sheet that I'll also put in the announcements. Let's look at a T account. So a T account, if I asked you how much cash do you have, how many numbers am I looking for?
Just one.
One. I want one number. I don't want to hear, well, I left with $50 this morning, but then I got the Coke and the lunch, and somebody gave me $5. So I increased my cash this much and decreased it that much. I don't want that. I'm like, hey, how much cash do you have? $6,200. Ah, thank you. So when we're looking at a T account, we're looking for one balance. So you're going to add up both sides. You're going to subtract the smaller side from the bigger side to get that one balance. The other thing you need to know is, if I asked you, what is the normal balance of an account? I'm not looking for a dollar amount. I'm looking for the answer either debit or credit. The normal balance of an account is whatever it takes to increase the account. So if it was an asset, the normal balance is a debit. It's also what you would expect to see. You would expect when you looked at the general ledger, you'd expect to see the balance of being a debit, because if the balance was a credit, it means you have less than no cash. That's bad. Liabilities, the normal balance is a credit because a credit increases the account. So a normal balance is a credit. Equity, the normal balance is a credit. It's in our PowerPoints too. I just thought this would be faster. I don't know why I thought that. Oh, here we go. Oh, there's the one I love. How does it do this? So this takes time. When I taught this in the classroom, in a physical classroom, I would write this up on the whiteboard at the very top of the whiteboard, and I would do that every single class that I came into. This is from our PowerPoint. This is exactly what your book looks like. What the heck? I'm going to do it here. All right. Do you see on the right hand? Am I sharing it? See on the right hand side the basic accounting equation? All right. Do you see on the right hand side the basic accounting equation? I'm not hearing anything. I keep going to slide player. Fine, I'll pull it up. No, I don't want to pull up ours. I don't want to take that kind of time. Okay, Ryan, am I sharing on the right-hand side? Does it say summary of debit and credit rules?
Yeah, I can see it, but it's somewhat covered up by the by all of our pictures.
Move your pictures. I'm going to open up some class. I got kicked out of class again. One moment. Apparently, in the interest of security, they've reduced the amount of time I can be logged out of my class without it shutting me out. I asked them one time when they started this if they've actually had students like break in. Okay, I'm going back into our course. I'm going to pull up the PowerPoints so I can show you where it is. And this is a sheet that I recommend that you have sitting next to you throughout the entire course, the entire time you're working on any of the assignments, because you simply aren't going to memorize it off the top. It's opening slowly. Yay, finally. All right, I'll share this so you can see where I'm going with this. Okay. This is your reference sheet that you should have with you whenever you're doing anything. So here we can see assets increase with a debit, decrease with a credit. Liabilities are the opposite. They decrease with a debit and increase with a credit. Common stock increases with the credit and decreases with the debit. Dividends take away from equity, so they work the opposite. They increase with the debit and decrease with the credit. Revenues increase equity, so they work the same way stock does. They're increased with the credit and decreased with the debit. And expenses take away from equity, so they work the opposite. They're increased with the debit and decreased with the credit. And it's like I said, this is not something you will memorize during this class. This is not one of those things where you should feel like I need to be able to do it by myself without this. Okay, the last couple of things we're going to go over and I'll let you go. So we have to write journal entries down, and we're going to do that in a journal. A journal entry is an accounting transaction. It's how we write down an accounting transaction. It's where you're going to use debits and credits. So this is messy because of all the explanations on it, but this is what a journal entry looks like. So you have the transaction date. The journal is also the only accounting record that's chronological. It's the only accounting record that's chronological. All of the other ones are arranged by account name. The journal is arranged by date. It's like each transaction that happened day after day after day. So the top one says we're debiting cash. Notice that it's over to the left because debit means left. We're debiting cash. We know that if we debit an asset, we increase it. So we just increase cash $30,000. We're crediting common stock. We know that because it's over to the right, and credit means right. Common stock is an equity account. We increase equity with a credit. So when we increase equity, we credit it. So this journal entry shows that we increase cash $30,000 and we increase common stock $30,000. Okay, this I really, really, really want you to write down. It's in an announcement, but it's really, really important. There's 5 steps. If you follow them in order, you will make fewer mistakes. When you are analyzing a transaction and writing down a journal entry, the first thing that you ask yourself is, what happened? A lot of students that miss the journal entry miss it because they didn't stop long enough to really think about what happened. You should be able to picture the transaction, put it in your own words. So number 1, what happened? Number 2, what accounts are affected? And by that, I mean like cash, common stock, supplies. Those are all accounts. What specific accounts are affected? There will be at least 2. There could be more, but there will always be at least 2 because they have to be equal. So what accounts are affected? When we practice these, you'll see on my videos that I write down the account names. Then the next thing, step 3, is did each account increase or decrease? So what my sheet of paper would look like was I would have like cash, common stock, comma, and then, oh, cash increased. Okay, so I'm going to put a little up arrow. Common stock increased. So I'm going to put a little up arrow. Then I ask myself, what type of account is it? That's step 4. Step 4 is what type of account is it? Is it an asset, liability, revenue, expense, dividend? What type of account is it? After I figure that out, the last question is, do I debit it or credit it? Now I go and I look at my resource sheet and I see, oh, it's an asset, I debit it. So I don't have to know what I do with cash and supplies and accounts receivable and equipment and buildings. I just have to know when I'm doing the journal entry, is it an asset? Now I can look, okay, an asset increases with a debit, so I'm going to debit it. So 5 steps. What happened? What accounts are affected? Did each increase or decrease? What type of account are they? Debit or credit? And you'll see this. This is in the videos. All right, so that's the journal entry. I did want you to know that. Now, we can't figure out account balances from the general journal because it's all chronological. If I asked you how much cash do we have, you'd be flipping through the pages going, oh, wait, here's where it increased, add that. Oh, here it decreased, subtract that. That wouldn't work. That wouldn't be very feasible at all. So what we do is we take these accounts and we break them apart and we put them in their own bucket. So like I'm going to take cash and I'm going to go put that in the cash account for $30,000 and take common stock and put that in the common stock account for $30,000. So then what I have is like, here's the general ledger for cash and I can see my debit of $30,000 increased it. I have a credit of $2,500 that decreased it. And then I have a credit of $26,000 that decreased it. And then I have a debit of $4,200 that increased it. And I always see what my balance is. That's in the general ledger. So I take my journal entry, I break it apart, and I put it into the correct bucket in the general ledger. That's what I will then prepare the financial statements from. Okay.
Real quick on that
Let me make
last
sure.
one, PR, was that period reporting or right there next, right next to debit? Yep, PRG1.
Oh, PR. Yeah, so that would be for like where it is in the general ledger. But
Okay.
we don't actually use that anymore. What you will see sometimes is a notation if it's an adjusting entry. And adjusting entries we're going to learn next week. But what adjusting entries are for is like, let's say that deposit that I received on the cushions, I didn't record it as revenue, but I recorded the money. And now when I earn the revenue, I have to do a journal entry. So you will see like that noted there, like an adjusting entry. And also it's used to tie it back to the paperwork. So you can see, oh, I would go and look at this paperwork. We used to keep them in binders. Things are a lot more streamlined now, like, you know, on the computer. This actually takes you through 10 different transactions, and they start at the beginning of the chapter doing them just based on the accounting equation. And then at the end of the chapter, they do it showing you the journal entry. So it's a really good thing to look at, and I have videos on it. Okay, I want to make sure that I'm not leaving you with something that's just going to throw you for a loop when you see it. So we're just going to go through this real quick to make sure I'm not leaving you stranded with anything. Okay, so we did assets, liabilities, and equity. Assets, liabilities, equity, revenue, or expense. This is going to be where you look at, so my recommendation for these, where you're trying to figure out the normal balance, is that first you identify what type of account it is. So like prepaid parking, prepaid, I paid it in advance, so that's an asset. So now go look at your reference sheet. What is the normal balance for an asset? The normal balance for an asset is a debit. And rental revenue, what type of account is it? It's revenue. I'm going to look at my resource sheet. Revenue is increased with a credit. So instead of figuring out what each one of these do, take it and ask yourself, what type of account is it? And then go look at your resource sheet. This is going to be, is it increased with a debit? No, this is which one decreases it. So it's the opposite, still working with debits and credits. This one you're going to take, this one gets more complicated. So what we're going to do with this is, I'll walk you through the first one. I would do these all together on all three tabs. You're going to apply them to the accounting equation. Then you're going to do the journal entry. And then you're going to put them into the T account. So let me show how this works, because the homework problems are the same way. On May 15th, Deshaun Tyler opens a landscaping company called Elegant Lawns by investing $84,000 in cash, along with equipment having a $44,000 value in exchange for common stock. Okay, so the first thing I do is I'd say, what accounts are affected? And this one actually has three. It has cash, equipment, and common stock, 3 accounts. Then I'm going to ask, like, okay, did each account increase or decrease? The equipment increased, I would be writing this down. The cash increased, and the common stock increased. Okay, what type of account is each? Well, cash is an asset and equipment is an asset. So the assets increased. They invested $84,000. I'm pulling up my calculator. They invested $84,000 in cash and equipment that was worth $44,000. So we've invested a total of $128,000 in assets. For that, we gave out common stock. So we had to have given out the same amount in common stock. Now, if we did that as a journal entry, cash was, we're going to have, we increased it with cash, which is the debit. We increased cash. $84,000. We increased equipment. So we increased an asset with a debit. So we increased equipment, $44,000. And we gave out common stock, which means we've increased equity. So we're going to credit that, $128,000. So that's what the journal entry looks like for increasing cash and equipment and giving out common stock. And this is where those 10 transactions would be really helpful, and I have a video with each of them. Okay, so that's the journal entry. but we're not done yet. Now we're going to go to the T account. The way these look are a little confusing. So like, here's the date. So on May 15th, and if it's a debit, the date goes on the left. If it's a credit, the date goes on the right. I don't like the way they're set up, but it's not my book. Cash increased by $84,000. So I'm going to put $84,000. Equipment also increased. So I'm going to go to this account, May 15th, and it increased, what do we say, $44,000. And then I'm going to go to common stock, and now the date's over here on the left. Common stock, I'm going to credit for $128,000.
So Mike, I have a quick question.
Mm-hmm.
Why is common stock equating for equipment as well? I understand the contribution of 84,000, but why did the equipment go to common stock as well?
Because, okay, so let's say that we have a company and somebody is going to enter with us and they're like, well, I've got $84,000 cash, but I also have this delivery van. So you don't have to buy a delivery van. I'll go ahead and put this delivery van in as part of my equity in the company. Does that make sense?
Yes.
So this is how you do these. It's not as confusing as it looks, but I highly recommend doing each one as you go, because otherwise you're looking at this general journal and you're trying to go to the T accounts and you're going to make mistakes filling in the T accounts. Here you're just going to say whether each one increases with a debit or a credit. You're going to look at your resource sheet. Got a lot to practice on that. And then here you're going to add up T accounts. So like with cash, I'm looking at that and I'm saying, okay, so on my debits, I have 130 plus 330 plus 50, but I decreased it 80 and I decreased it another 90. So I'm going to subtract those. So my ending balance is actually a $340 debit. So nothing goes on the right-hand side. The only place you have any number, like if we looked at it, accounts receivable is not a good answer. If we looked at, well, here, wages payable, we had it, we paid it, the balance is 0. But here it matters because I'm going to think, is the normal balance a debit or a credit? The normal balance for liability is a credit. So I'm going to put the 0 on the credit side. So that's how you add up the T accounts. All right, how do you feel right now? It's okay to be overwhelmed.
I felt good just until the T accounts because I haven't finished reading chapter 2 yet.
Okay. So you are going to get a lot of help if you go to the announcements. I'm just going to show you now that we've talked about it, what's here. So here's a video that I did that's just really short that talks about the accounting equation and the expanded accounting equation. This is a video on the accounting assumptions, principles, and constraints. You can read that in your book. You could skip this video if you wanted to. It's also a really good resource just for answering those questions. This video goes over the financial statements, and I talk about how they're connected and how they work together. This video goes over journal entries that you're asked to do for your homework, and we work them. And then this, in week 2, you can, yeah, it's open. You can do this for practice also. I have it there both places because you'll practice, and you'll see when you start this that I've written down on it. Can't show it.
We're starting adjusting.
Here under week 2, you can see those 5 questions I asked. What happened? What accounts are affected? I'm just going to go ahead and make this available now. since that's where I put it. Now you'll be able to see week 2 also. So that's where those questions are to help you remember. Okay, here's what we're going to do. On Friday, we're going to do a complete review, and it'll also be practice because we'll work through an example of every single question that's going to be on the quiz. Like I said, it's a 4-week class. You can't afford to get behind. I also know it's Thanksgiving, which is a challenging time. So we'll just see where that goes. Other than that, we'll meet at the same place on Thursday, except for I'll have my tablet working by then. And do you have any questions before we go?
No, I was gonna tell
Oh.
Ephraim though, when he said, can you make it bigger, please? I don't know if he's talking about the videos. I know the videos I had to go to.
Oh, yeah. The
I had to go
videos,
on
there's
version
a,
to make them bigger.
oh, okay. Yeah, the videos, I do have them on YouTube, and the link there goes to YouTube. I put them there because some students that are out of the country can't, for some reason, view them inside of the classroom. I don't know, so I'm just like, I'll just put them on YouTube.
Yep.
So they are there. You can access them. There's that little box in the bottom right-hand corner, you know, to make it bigger. So my phone number is on top of the course outline, but I'm also going to put it in the chat right here, so it's easy for you, 720-883-1630. Just like most, wait, I just did that privately to Ryan. Let's see, stop the intent, everyone. 720-883-1630. Just like everybody, I'm not, or most people, I'm not traveling for Thanksgiving. I'm going to cook. I mean, basically, it's just leisurely cooking and having a meal with my family, which is kind of like every day of the week. Just not as leisurely.
No, we're going to use glass plates, not paper.
Oh, we're going to use glass plates, not paper plates, but not the china that's in the cabinet because I'd have to wash that by hand. So, and hey, company isn't coming over. I'm just glad I don't have a mask on. So I'm literally here. So what I'm trying to say is it's actually okay if you call me. My husband's taking accounting in college. It was a long time ago, but he hasn't forgotten it. So when people call me with questions, he just wishes that he had somebody that taught him like that when he was in college. So you are more than welcome to call me while you're working on it over Thanksgiving if you are. You can text me. You don't have to worry about the time. I think it's too late. You can text me if I'm up. You might be answer the question. I had one student that about fell out of his chair because he called me by accident at like 12:15. It was Christmas time. But I was awake. I was walking down the stairs and it was right before final exam, so I answered the phone. It's kind of ironic because he's the same person that called me for advice on an interview and then called me right back. He got the job teaching. And gosh, this was like, I'd say it's been at least 10 years since I've seen him, maybe 15. So you are welcome to text me. You're welcome to call me. And I will see you on Friday. It is a lot of information. Everybody feels that way. I'll see you on Friday. Have a good Thanksgiving in spite of the obvious.
I was just gonna say that's something, it's a free app. It's just for messaging, like texting people in the group.
Yeah.
Classes. So like when we need help with like peer review or, you know, like, hey, questions about like, hey, does anyone remember how we do this format? That's what we all use to talk.
You guys can connect with each other.
Yeah.
Oh, also, by the way, you can, you're welcome to use my Zoom room if you guys want to work together. You just start a meeting and the meeting number is always my phone number.
Okay.
So, I mean, I know Zoom's free up to 45 minutes now and tomorrow it's free all day, but you're welcome to go in and use that to work together. Also, Blackboard Collaborate in our classroom. The reason I don't use Blackboard Collaborate is because I can't use my tablet. From today's example, you wouldn't understand what that means, but anyway, have a good Thanksgiving. Enjoy your family. Take some time to do that. And I will see you on Friday. Call me if you have questions. All right. Good night, you guys. Thank you for coming.